If you're a low-income veteran or you know one, there is a tax-free monthly payment worth up to $2,795 that the VA is quietly making harder to get. And there's a deadline staring you in the face, September 30th. That date matters more than you think, and I'll explain exactly why in the next few minutes. Here's what you're going to learn today. First, the exact pension benefit most low-income veterans never even hear about, and who actually qualifies. Second, the one form that locks in your effective date so you don't lose months of back pay. Third, the income and asset rules that trip up almost everyone who applies. Fourth, a survivor's pension your spouse may already be entitled to right now without knowing it. And fifth, the single VA denial trick that blocks more pension claims than any other. Stick around, because that last one is the piece most veterans miss entirely, and by the time they figure it out, the money is already gone. Here's what's going on right now. On December 1st, 2025, VA pension rates went up by 2.8% thanks to the annual cost of living adjustment. That means the maximum aid and attendance payment for a married wartime veteran jumped from $2,795 a month to $2,874 a month. For a single veteran, it went from $2,358 to $2,424. That's real money, over $34,000 a year tax-free for a married veteran who qualifies. At the same time, the VA's net worth limit increased to $163,699. That's the ceiling on your combined assets and annual income the VA uses to decide if you're eligible for pension. If you're under that number, you may qualify. If you're over it, you don't, unless you understand how the medical expense deduction works, which I'll break down later. But here's why September 30th matters. Buried in the VA's own fiscal year 2026 budget documents, there's a proposed implementation deadline of September 30th, 2026, tied to new Social Security data verification processes. What that means in plain English is the VA is building a more aggressive system to cross-reference your income using Social Security records. Once that system is fully operational, the scrutiny on pension applications is going to get tighter. File before September 30th, and your claim moves through under the current process. Wait too long, and you're walking into a more complicated verification maze, one that could slow your approval or trigger denials that didn't happen before. Take John, a Vietnam-era veteran from Ohio. He served from 1968 to 1972. He's 74 years old, living on a small Social Security check and nothing else. His wife needs in-home care, and the bills are eating him alive. He had no idea the VA even had a pension program for wartime veterans, let alone one that could pay over $2,800 a month tax-free. Most veterans have no idea this exists. John's story is more common than you think. Thousands of veterans in exactly his situation are eligible right now and haven't filed a single piece of paper. Number one, the basic wartime veterans pension. This is the foundation. Everything else builds on top of this. The VA pays a tax-free monthly check to wartime veterans who are 65 or older, or who are permanently and totally disabled from non-service connected conditions. The key word there is wartime. You don't have to have served in combat. You don't have to have been deployed overseas. You just need to have served at least one day during a recognized wartime period that includes World War II, Korea, Vietnam, the Gulf War, and the post-9/11 era. You also need at least 90 days of active duty, with at least one of those days during a wartime period. For 2026, the basic pension pays up to $1,453 a month if you're a single veteran with no dependents. If you have a spouse or a dependent child, that jumps to $1,903 a month. That's over $22,000 a year, tax-free. Most veterans have no idea this even exists. They think VA benefits are only for service-connected disabilities. They don't realize there's a separate pension for low-income wartime veterans who simply got older and need help. Here's how to claim it. Step 1, file VA Form 2, 1-5, 26EZ, the application for pension. You can do this online through va.gov by mail or with help from an accredited VSO. Step 2, include your DD-214 to prove your service dates. Step 3, report your income and assets so the VA can calculate your eligibility. That's it. The form does the heavy lifting. The deadline to keep in mind is September 30th. File before that date to move through the current verification process before the new Social Security cross-checks go live. Now, if you think $1,903 a month is good, wait until you see number 2, because this is where the real money shows up. Number 2, aid and attendance. This is the benefit worth up to $2,874 a month for a married veteran in 2026. It's an enhanced pension paid on top of the basic pension. Here's how it works. If you need assistance with daily living activities, things like bathing, dressing, eating, using the bathroom, or adjusting prosthetic devices, you may qualify for aid and attendance. You also qualify if you're bedridden, if you're in a nursing home, or if your eyesight is severely limited even with glasses. For 2026, a single veteran with aid and attendance can receive up to $2,424 a month. A married veteran or a veteran with a dependent can receive up to $2,874 a month. That's $34,488 a year, tax-free. Here's the common reason veterans miss this one. They assume that because they can still walk and talk and feed themselves, they don't qualify. But the standard isn't whether you can do everything alone. It's whether you need regular assistance to stay safe and functional. If you use a walker, if you've fallen, if a caregiver checks on you, if your doctor has noted any cognitive decline, any of that can support an aid and attendance claim. How to claim it. Step 1, file VA, Form 2, 1-526EZ if you haven't already. Step 2, have your doctor complete VA, Form 2, 1-268. The examination for housebound status or aid and attendance. This form is critical. It's where your doctor documents your need for daily assistance. Step 3, submit the 21-2680 along with your pension application or as an add-on if you're already receiving basic pension. If you're already receiving basic pension and you realize you should have been getting aid and attendance, you can file for an increased rate. Don't let that go. The difference is over $1,300 a month for a single veteran. But here's where it gets interesting. Do you qualify? Let's find out with number 3. Number 3, the housebound allowance. This is the middle tier. Most veterans have no idea it exists. They know about basic pension. They've maybe heard of aid and attendance, but housebound sits right in between, and it's designed for veterans who are substantially confined to their home due to a permanent disability. If you can leave your home but only with considerable difficulty, if you need help getting around, if your condition keeps you inside most of the time, housebound may be your fit. For 2026, a single veteran with housebound benefits can receive up to $1,776 a month. A veteran with a spouse or dependent can receive up to $2,226 a month. The reason veterans miss this one is simple. Nobody tells them about it. VSOs often jump straight to aid and attendance and skip right over housebound. But if your medical evidence supports housebound more clearly than full aid and attendance, filing for the right category can mean the difference between an approval and a denial. How to claim it. Step 1, file VA Form 2, 1-526EZ. Step 2, have your doctor complete VA Form 2, 1-268. The same medical evaluation form used for aid and attendance. The VA uses this form to determine whether you meet the housebound standard. Step 3, include a statement describing how your condition limits your ability to leave home. You cannot receive housebound and aid and attendance at the same time. The VA will award whichever one your evidence best supports, so make sure your doctor documents your specific limitations accurately. Now, before we get to number 4, let me ask you something. Have you ever filed an intent to file with the VA? If the answer is no, you may be walking away from months of back pay, starting right now. Number 4, the intent to file. This isn't a benefit, it's a strategy, and it's one of the most powerful tools buried in the fine print of VA regulations. Here's how it works. When you submit VA Form 21-0966, the intent to file a claim, the VA locks in your effective date. That's the date your benefits start counting from. You then have 1 full year to submit your complete pension application. As long as you file the full claim within that 12-month window, your benefits are retroactive to the date the VA received your intent to file. Let me put real numbers on this. Say you submit an intent to file today, and it takes you 4 months to gather your medical records and complete the application. If you're approved for aid and attendance at $2,874 a month, your first payment could include 4 months of retroactive pay. That's over $11,000 in a single check. The reason veterans miss this is simple. They wait until everything is ready, then file. By doing that, they lose every dollar between now and the day they finally submit. Don't do that. File the intent to file first, then gather your documents. How to claim it. Step 1, submit VA Form 2, 1-0966 online, by mail or in person at a regional office. Step 2, get a confirmation that the VA received it. Keep that confirmation. Step 3, file your complete pension claim using Form 2, 1-526EZ within 1 year. That's it. The clock starts the day they receive the intent to file. Before the window closes on September 30th, make sure your intent to file is already in the system. It costs you nothing and could be worth thousands. Now, if that one caught you off guard, wait until you see number $5 because this is where most veterans get tripped up before they even start. Number 5, the net worth and income rules. The VA doesn't just hand out pension to anyone who served. There's a financial gate you have to pass. For 2026, the net worth limit is $163,699. That number includes your assets plus your annual income for VA purposes. Here's what trips people up. They hear net worth and immediately think, I have a house, I'm over the limit, I don't qualify, but your primary residence doesn't count, your car doesn't count, basic household items don't count. The VA is looking at things like bank accounts, investments, stocks, bonds, and any real property other than the home you live in. So if you own a $300,000 home, that doesn't disqualify you. If you have $50,000 in savings and $20,000 in income, your net worth for VA purposes is $70,000 and well under the limit. Here's the second part that catches veterans. There's a 36-month look-back period. If you transferred assets for less than fair market value within the last 3 years, say you gave your house to your kids to get under the limit, the VA can impose a penalty period during which you receive no pension payments. This rule has been in effect since October 18, 2018. How to navigate this? Step 1, calculate your net worth the way the VA does. Don't include your home or your car. Step 2, if you're over the limit, talk to an accredited VSO or an elder law attorney who understands VA pension planning before you move any assets. Step 3, file your claim and report your income and assets honestly. Hiding assets is the fastest way to get denied and potentially face a penalty period. You'd think having a higher income would just reduce your pension, but there's a legal way to bring your countable income down, and that's number 6. Number 6, the medical expense deduction. This is the hidden lever inside the VA pension system. Most veterans have no idea it exists. Here's the rule. The VA calculates your pension by taking the maximum annual pension rate for your category, say $29,093 for a single veteran with aid and attendance, and subtracting your countable income. Whatever's left is what they pay you. But here's the key. You can deduct certain unreimbursed medical expenses from your income before the VA does that math. That includes things like Medicare premiums, out-of-pocket prescription costs, in-home caregiver costs, assisted living expenses, nursing home fees, insurance copays, and medical transportation. Let me show you how this works. Say you're a single veteran with $1,500 a month in Social Security income. Without any deductions, the VA would subtract $18,000 a year from the $29,093 A and A maximum, leaving you a pension of about $11,093 or roughly $924 a month. But if you're paying $1,200 a month for an in-home caregiver, that's $14,400 a year in deductible medical expenses. Subtract that from your income, and your countable income drops to $3,600 a year. Now your pension jumps to over $25,000 a year, about $2,100 a month. That's the difference between a small check and a life-changing one, all because of a deduction most veterans never claim. How to claim it? Step 1, track every unreimbursed medical expense you pay out of pocket. Step 2, report these expenses on your pension application or file them as a report of changes. Step 3, keep receipts and documentation. The VA may ask for proof. Now, if you're a surviving spouse, listen closely for the next 60 seconds because number 7 is for you. Number 7, the survivor's pension. If your spouse was a wartime veteran and has passed away, you may be eligible for the VA survivor's pension. This is a separate tax-free monthly payment for low-income surviving spouses and unmarried dependent children of wartime veterans. For 2026, the base survivor's pension pays up to $1,025 a month. But if you qualify for aid and attendance as a surviving spouse, meaning you need daily assistance with living activities, that amount can increase to approximately $1,558 a month, over $18,000 a year, tax-free. Here's what your VSO probably won't mention. Thousands of surviving spouses are already collecting this, but many more are eligible and haven't filed because they didn't know it existed. The widow or widower often assumes that when the veteran passed, all VA benefits ended. That's not true. The survivor's pension is a completely separate program with its own application. How to claim it? Step 1, file VA Form 2, 1-534EZ, the application for survivor's pension. Note, this is a different form from the veteran's pension. Don't use 2-1-526EZ for a survivor's claim. Step 2, include the veteran's DD-214 to prove wartime service. Step 3, if you need aid and attendance, have your doctor complete VA Form 21-2680 and submit it with your application. The same September 30th urgency applies here. The same net worth limit of $163,699 applies. The same intent to file strategy works. Submit Form 2, 1-0966 to lock in your effective date before you gather everything else. One more thing. If your spouse died from a service-connected condition, you may also be eligible for DIC, Dependency and Indemnity Compensation, which pays $1,699.36 a month in 2026. DIC and Survivor's Pension are different programs, and in some cases you need to choose between them, but you should know both exist. Here's what your VSO probably won't mention, and it could be costing you thousands of dollars every single year. You cannot receive VA pension and VA disability compensation at the same time. That's not a rumor. It's written directly in VA regulations. If you qualify for both programs, the VA will pay you whichever amount is greater, but never both. Now, most veterans hear that and think, okay, I'm already getting disability comp, so pension doesn't matter to me. But here's where thousands of veterans are leaving money on the table without realizing it. Let's say you're a wartime veteran rated at 10% for a service-connected condition. In 2026, that pays about $175 a month. Your VSO helped you file that claim years ago, you've been collecting it, and you moved on. Nobody ever sat you down and said, wait, how old are you now? What's your income? Do you need help with daily activities? Because if you're 65 or older, low income, and you need regular assistance, you could qualify for aid and attendance pension at up to $2,424 a month as a single veteran, or $2,874 if you're married. That's not $175. That's a completely different financial picture. But to get it, you'd have to give up the disability compensation and switch to pension. The VA won't make that switch for you. They won't even tell you the option exists. You have to ask. And here's the part buried in the fine print. When you file a pension claim, the VA is required to consider whether you might also be entitled to disability compensation, and vice versa. It's called an election. But in practice, most VSOs focus on one track or the other. The disability guys push disability claims. The pension people push pension. Almost nobody sits down and runs the numbers side by side to tell you which one actually pays more for your specific situation. So here's the move. If you're currently receiving disability compensation at a low rating, 10 or 20% die, and you're 65 or older with limited income and medical needs, pull out a calculator. Compare what you're getting now against what aid and attendance pension could pay. The difference could be over $2,000 a month, but you have to make that election yourself. The VA won't do it for you. And if you miss it, you lose it, month after month, year after year. Let me bring this all together because the clock is ticking. September 30th is your deadline. The VA's new Social Security income verification system goes live after that date, and once it does, pension claims are going to face tighter scrutiny and longer processing times. File before September 30th and you move through under the current system, simpler, faster, fewer hurdles. The highest value payoff we covered today is aid and attendance pension, up to $2,874 a month for a married veteran, or $2,424 a month if you're single. That's over $34,000 a year, tax-free. If you're a surviving spouse, that number is up to $1,558 a month. Either way, this is life-changing money that millions of veterans and their families are eligible for right now, and most of them will never file a single form. Here are your 3 action steps. Step 1, file an intent to file today using VA Form 21-0966. This locks in your effective date and gives you a full year to submit your complete application. It costs nothing, takes minutes, and could be worth thousands in retroactive pay. Do this before anything else. Step 2, gather your documents. You'll need your DD-214 to prove wartime service, your income and asset records, and if you're claiming aid and attendance or housebound, have your doctor complete VA Form 21-2680. If you're a surviving spouse, you'll file VA Form 21-534EZ instead of the Veterans Form 21-526EZ. Step 3, submit your complete pension application within that 1-year window. If you're denied, file a decision review within 1 year of the denial date. Don't let a denial be the end of the story. Many pension claims are approved on appeal when the initial application was missing key medical evidence or income documentation. Share this with any veteran in your life. Someone you know is leaving money on the table right now, and they may not even know it exists. Hit subscribe and turn on the bell, because VA rules change every single month, and I'll make sure you're the first to know. VA Benefits Alert is an independent informational channel and is not affiliated with the U.S. Department of Veterans Affairs or any government agency.